Hello guys, and welcome back to another video. In this video I'm going to be showing you guys how I build a directional bias using 3 key steps. Now the first, I'll write this down right here, is structure. Now structure is, as you probably heard, structure is king. Structure will allow you to understand where buyers and sellers are in the market, and I'll display it to you shortly. Second is liquidity. Right, liquidity is a very important it's a very important proponent of the market. Okay, the market runs on liquidity, and I've explained this before in a previous video also. And the third is order flow. Okay, now order flow is something I'll explain shortly as well, but these are the 3 main components on what you need to use to understand the bias of your zones or your pair or whatever asset you're trading. It doesn't matter if it's FX, currencies, commodities, even crypto. To understand to build your directional bias, you need these 3 things. Let me just make it a little bigger so you guys can see. Right. Okay, so let's first get started on the high time frames. Now, as this will show you, the higher time frames will give us our macro perspective. It is more important as there is less manipulation that takes place on these time frames. So, for example, on the monthly, right, we see price break up and break this structure point, right? This pivotal point, and this was in 85. It broke this pivotal point on Euro USD where it showed bullish tendencies after that structure break was continued. Then what do we see? We saw price retrace as it naturally does, and then come back to a zone of interest. We'll call it a order block or just a demand zone, right? I'll label this blue just so you guys can understand, right? Price pushes up, comes back to this demand zone before, what does it do again? Breaks this structure point once again. So on the monthly time frame, we're clearly bullish, right? At least up until 2007. So what price is doing now is, again, it's retracing. It's looking to come back to a prominent demand zone. Again, that we saw a prominent structure break on the monthly time frame. So this zone is very important and pivotal on Euro USD. But we also need to understand the perspective on the past few years of how Euro USD has been performing. So if we jump down on the weekly, right, what we can see is we've been in this clear downtrend, right? After we saw that breaker structure, what does price do? After we see an impulse, we see a retracement, right? That should be very simple concept. We see an impulse, and then you see a correction before price comes back to a prominent zone, and then you see price continue on with this previous trend. So right now we're in the phase of a correction phase. Okay, so on this correction phase we are clearly bearish, right? If I make this a little simpler, right, we're clearly very bearish currently, at least on the weekly, at least, right? We've seen price push down, it came up, reacted from this zone here, right? If I supply, right, tricked traders into thinking that we may see a push up, and then what did it do? It displayed a sort of a double top, a trap, before continuing on down, showing clean order flow, where you see again a structure break to the downside, right? We have a clear breaker structure to the low. So this is a pivotal point, this zone here, because this is where a trap was laid out. But let's push down even on the lower time frame. Now we understand we're bearish within a correction zone, so price still has some downside to go before we see any bullish reaction. Again, we can't predict, we can only react. So what we do know from now, we are clearly very bearish, especially once we've seen a clean trap on the weekly time frame, on the monthly or weekly time frame take place. But also, if we dive in a little deeper on the daily, what you'll see is we are still in this sort of bearish trend even here, right? These past few weeks, if I show this, move this breaker structure to the side, what you'll see here is we're in this sort of on this daily trend of bearish price action, right? If I just right, we see this sort of bearish trend on the weekly time frame, right? We have this very simple channel where price is reacting from. If I just put it something like this, we see this very simple channel on the daily. Now if I go back on the weekly, we understand what price is doing, right? Price is likely to come back, push down lower, mainly because we've seen manipulation and we've seen a breaker structure on the left here, which is a very prominent zone on the weekly and monthly time frame. And we're also within a sort of bearish channel on the daily time frame. So now we understand on the monthly we're bullish, but we're in a correction zone, which makes it bearish, right? If I display it like that, right, make it a little simpler. We're sort of in a bearish channel on the monthly time frame, but which is corrective. So we're anticipating a price to come back within this zone before we see any significant bullish reaction, for price to come back up to the upside or potentially break these highs up here. So we understand that, and we also understand that price will likely come back to these lows again within this bearish channel. So what I would now do is look for bearish confirmations, because now we've come back to this channel highs again on the daily time frame. Again, this is on higher time frames, so you're less likely to see manipulation take place, much less often than you'll see on maybe the lower time frames, such as 1 hour or 4 hour or 15 minutes, etc. So now we've come into this zone. Let's scope down to the 12-hour time frame. So price, we've seen price offer a breaker structure here on the left, right? Sorry, we've seen a clear breaker structure here on the left. Just mark that as BOS. But if we inspect price a little closer, what you'll see here is we're seeing a breaker structure, and then we're seeing a corrective move. Price come up. So if we look on the left here, what do you see? Here we see congestion. We see consolidation, right? What we refer to as manipulation. Distribution. So I'll leave that as grey. And then what you see as manipulation is here, where you see consolidation, right? Advertisements of liquidity for traders to get involved in the chop before price pushes up, takes out all the sellers, right? So we label that there, and then it makes this real move, which is the break and breaks this pivotal structure point on the daily time frame, right? So now what do we see is a corrective move. After we've taken that low, price then again takes this previous low and then offers a corrective move, right? Again, taking more liquidity before coming back to a pivotal zone, which is here, right? This is a pivotal zone because price has already manipulated this zone. We're within this channel. Now we're likely going to wait here to see a bearish reaction, because if we see a bearish reaction from this zone, it builds a confluence that we're likely going to push down lower. Remember, we're in a clear weekly channel on the daily, and we're bearish on the weekly, so we need to keep that in mind as well. So let's scope on the 6 hour. Right, understand manipulation has already taken place, so price will if it pushes higher than this zone, then this is our invalidation zone. Okay, if it pushes higher, then bulls are clearly in control, and then we are bearish. But that's less likely as manipulation has already taken place, and we have broken structure here to the left. So let's let price play, and there we go. We got our bearish reaction. So now I'd push down to I'd mark this as a supply region, right? Remember, structure point. This was one of the zones that led to that structure point here, a break of the structure point. So then I push down to the 4 hour, right? And this is where I'd look at order flow, because we understand liquidity being hunted and taken, as we saw that consolidation. Then we saw that breaker structure. Now I want to look at order flow. Now order flow is when price taps into a certain region, right, and then pushes down, breaks structure, will come back up higher to a prominent zone, right, of the extreme levels of that high, and then push back lower again, break structure, come back to a prominent level within a zone, and then push lower. That is what you refer to as order flow. Okay, to put it very simply, it does get a little more specific, but that is for I break that down for mentorship students. But so now I push down to the 4 hour, right? Now what we've seen is price come up on the 1 hour, push into this red zone, right, and it was also within our daily and weekly bearish channel. Now if you look closely, what you'll see here is we have a clear gap in the market. We have a clear gap in price. Now if you remember about gaps, I recommend you, or if you don't, I recommend you go watch one of our previous videos I made about gap trading strategy. But it's a confluence that you can in essence build. When there's a gap in the market will always fill that gap. So now we have confluence that price will at least come to this zone to fill it, so we can look for this as a target if you're an intraday trader. If you're a swing trader, you'd want to target the 4 or the daily low right here. Okay, so now we have that target built. Now what we need to do is wait for some sort of confirmation in price. So if I now scoop down to the 15-minute, what we see here is after that impulse we have some sort of corrective structure. So let's see price play. Right now we're in currently midnight, so we're approaching Asia. Right now we are starting to approach London. So before we approach London, we have sort of this consolidation again, right? Consolidation looking to advertise liquidity, advertise for traders to get involved. So we have clear cut consolidation. Now what I would look for is some sort of manipulation. So I want price to come up to this zone, right, within the supply, the main supply region, right, and then look for confirmations to take a short from this level on the lower time frames. So I'd place my limit there, right, or depending on how you trade, you could take an instant execution using lower time frame confirmations. Again, depending on how you trade, everyone trades differently. So I'd look at this zone for a bearish reaction before looking to get involved with my stops just above this pivotal high here for my to look for price to come back to fill this gap first. That will be my first target. So let's wait to see how price plays. Continue consolidation. Now we come into London session, right? London session has just begun and we're still in clear consolidation. Now price pushes up out of consolidation, taking out all these resting orders above here, collecting all those stop losses, all that liquidity, and then we see a clear bearish reaction just pre-New York. Okay, we see that clear bearish push from the higher time frame. Remember, we're seeing that clear order flow, manipulation, right? Consolidation here, collecting all that liquidity, pushes up. We see price come back to a prominent zone, and then we saw that big volume push to clear to break structure here on the left again, so which means we're still bearish, and that that gap has now been filled. So now I'll push up on the higher time frames, and I would look to take this swing low here, right? Let's open this up a bit and let's let price play. Remember, because we want to see a next structure break, because price is heavily bearish now. As we've seen that big volume push to the downside, you'd want to wait. Let's push up a little higher on a higher time frame, 4 hour. You want to wait for a push. So say you missed this move. Now we have clear consolidation, more of corrective structure. You'd want to wait until price breaks this low before you want to get involved again. So if price comes back lower, you'd want to wait for some sort of chop or some sort of corrective structure on the lower time frames before you want to get involved on the low again. for price to potentially come back to the low of this weekly channel, because remember, we're in this clear bearish directional zone. So shorts are the most favored scenario. Now you could look for intraday pullbacks on the 15-minute and the 5-minute, but that's for much more experienced traders, and I don't recommend that, as trading with the trend is always safest. Now we've seen price break that structure point. Now you'd want to look for some sort of, as I mentioned, some sort of consolidation before looking to get involved, for price to then come back down to the channel lows. If I mark out here, right, as I mentioned here, to the channel lows, by simply understanding the higher time frames and building that directional bias, you could easily have multiple opportunities to come back for price to come back to the lows, and just shorting price using your bias. And depending on whichever way you trade, it doesn't matter really, but as long as you understand the correct bias that is built simply by using one, as I mentioned here, if I go back on the monthly, structure, liquidity, and order flow. Okay, I hope that was simple or easy for you guys to understand. If you guys did enjoy the video, please do give it a like and subscribe, and please let me know in the comment section below what more videos you'd like to see in terms of trading or crypto or education wise. It'd be very much appreciated. With all that said and done, I'll see you guys on the next one. Bye bye.